I want to ask you about taxes because even though we're focused on stimulus at the moment, taxes may be a story for next year, obviously. Former Vice President Biden was asked about that at his town hall last night on ABC and tried to raise this notion of whether or not he would be able to work with other people, Republicans on the other side of the aisle, with regards to taxes. Here's what he said. Take a listen.
There's not going to be any delay on the tax increases.
No, well, I got to get the votes. I got to get the votes. That's why, the one thing that I have this strange notion. We are a democracy. Some of my Republican friends and some of my Democratic friends even occasionally say, well, if you can't get the votes by executive order, you're going to do something. Things you can't do by executive order unless you're a dictator. We're a democracy. We need consensus.
So, Joseph, how are you thinking right now about the potential impact on the trajectory, at least, of S&P earnings if tax policy reverses from the last few years?
Well, I think it's been interesting to watch the evolution around the market's perception of tax policy. If we were sitting here, middle of the summer and the expectation of a blue wave were happening, I think many of us would be saying that's going to be a headwind for markets because of the near-term implications of tax policy, both on the corporate side as well as the individual side. And I think what has shifted over the last number of months is at least a perception that you're basically going to get a policy that's spend now, pay later. So the spend now part, which is stimulus in various forms, that will help fuel the economic recovery and the durability of that recovery. And then you phase in tax cuts down the road. Now, if Biden is shifting that to more immediate tax cuts, I think that's going to come back to a notion of that may be some headwinds, because increasing corporate tax rates, whether it be low 20s to high 20s, that's going to weigh on corporate earnings. No question about that. That's probably that shift alone is probably $10 a share in S&P 500 earnings, and the market's going to have to adjust to that at some point.
Joe, I'm going to come at you about a different subject, not the broad market, but actually your business. You've been at Neuberger a long time. We're starting to see a lot of pressure for consolidation among asset managers. Some of which obviously is resulting in positive moves up for some of these stocks. Eaton Vance, obviously, in a deal to be acquired by Morgan Stanley. You've got activists at Janus Henderson and Invesco trying to get them together. How do you see the world from your perch over at Neuberger Berman as a significant asset manager and the consolidation that may take place?
Certainly, it's been interesting to see some of those announcements over the course of the last number of months. We certainly feel that our competitive position is a strong one. We're almost $400 billion in assets under management. We have a broad-based business across both sort of more traditional elements of the sort of long-only business in both equity and fixed income. And we have a quite sizable private equity business. So I think we've been better positioned for some of the shifts in the asset management landscape over the last number of years. If we were more dependent on some of the more traditional elements of active equity, for example, or active large-cap U.S. equity, you might have a different point of view, but I think we feel like we're quite well diversified by client type, by asset strategy, asset class and strategy, and also by geography. So we feel good about that. We're certainly watching the competitive landscape around that to, frankly, from our standpoint, take advantage of that where we can.
Yeah.
In terms of taking advantage of that, Joe, are you looking at acquisitions? Do you think acquisitions make sense in the asset management world? Historically, this has been a pretty disparate industry because people say that when you do a deal, it's hard to kind of combine cultures of two different asset managers and make things work on that front. So is that something that you're also considering as you evaluate the competitive landscape?
Our industry is littered with asset management deals that have gone quite poorly, right? So we have grown organically over the course of the last 10, 15 years, and that's worked for us very, very well. Integrating a large acquisition, as some of our competitors are finding out, is very, very hard to do. So that's not something that we see on our landscape. But when our competitors go through that kind of disruption, it does present some opportunities because there are distractions associated with those kinds of mergers, and whether it's consultants or large pension plans or wherever, they look skeptically about how those deals are going to work.
Shepard Smith here. Thanks for watching CNBC on YouTube.